Oh glory, it's low FX, our market. It's been a long time though, cause of one or two. But right now I'm back in the market with my full-time analysis, and as you can see, we're swimming in profit right now. Like with deep, you can see the impulse move right from the last 3 hours candle, and this is the current three. This is the current 4-hour candle, the third one, and you can see we're deep in profit. Seriously, we're deep in profit. But I just want to give you guys this analysis because for some time right now I've been out of this. I've not been trading my strategy. I've been focused on doing something else, and that's the advice I'll give to you. Whether you are consistent or not, if it's your strategy, stick to it. This strategy was one that I modified. It's been working deeply. It's been going well, but I just decided for some time. I just decided to be flexible, and that flexibility, affected me, a lot. But I'm grateful that we're back. We're back. So this is the EURAUD trade. As you can know, my strategy is the simplest ever in the world. I can tell you, it's not that I'm bragging, but that's my strategy in the world. First of all, we are looking at the condition of the market, and from the 4-hourly time frame, we can discover from here. First of all, in my strategy we don't deal with the left side, but this is what you should understand. First of all, we're looking at the condition of the market, and the condition of the market tells us that it's a downtrend. It's a downtrend, which is like this. We know that it's a downtrend. Good. I'm not gonna leave that there. Why do we say it's a downtrend? Because it's creating lower highs and lower lows. It's creating lower highs and lower lows. That's what the market is doing. Lower lows. That's what it's doing. You understand? Good. I just want to identify this one for you guys to see. Lower highs and lower lows. So you can know the strategy is the simplest in the world. If you do this thing, I can bet you, man, in just try to master it though, because it's the basics. It's not like I'm telling you something extraordinary. It's the basics. So if you can master the basics, it's gonna be simple. It's gonna be very simple for you to apply. You understand? Good. What I'm doing right now is identifying the lower highs and lower lows, because this is a downtrend. So on the 4-hourly time frame though, this is what we discovered on the 4-hourly time frame though. Good. So on the 4-hourly time frame, but this way I got my entry from. Now the strategy is all about our exit points is here. And okay, where the market is currently right now. Let me just zoom it out back a little. You can see where I drew these lines. These are my exit points. This lower high here, my exit point is here. This current lower high here, my exit point is here. This current lower high here, my exit point is here, which was I hit this profit yesterday. And this current lower high here, my exit point is here. So if the market should break, this level here, I'll be expecting a retest here. If it breaks it impulsively, I'll be expecting a retest here. But if it breaks this level in a weak way, like weekly, I'm gonna check out for the enter at the Fibonacci. So but my entry is around here, then to this point. Since that's as simple as that. But let me just show you how I got this entry here though, because one thing you have to understand is that if you're trading from the 4 hours, you actually get into the trade late, and there's some opportunities that's going to pass you by, although that's not a bad thing in the market. But you can see how neat this chart is right now. You can observe that from the 4-hour time frame, we discovered that this high was lower than this low, we had this low here, this high here, let me identify that for you. Let me identify that. Let me look where's the text. Okay, let me just write it here. This high, lower high. Good. Let me leave that there. Lower high. This lower high here was higher than this previous, than the next high, and the low of this lower high broke this previous low. That's what I want you to identify first. My strategy is a breakout strategy and a continuation strategy. We'll continue the trend when we identify the breakout. You understand? Then if we cannot continue the trend, we anticipate the next breakout. So what we're doing right now is that there's a trend, so we have to continue the trend. How do you continue the trend? You continue the trend by identifying the highs and low of the trend, then expect breakout in the continuation direction. So the continuation, this is a downtrend. We are looking now for the market to break the previous lower low and form a lower high for our entry, because it's a downtrend. We are entering from lower highs. So this we discover here that the market broke this lower high, this lower low here, making this lower low below this low. You understand? And when this lower low became below this low, it qualified this high to be a lower high. Is one thing you have to understand. It qualifies it to be a lower high, and after qualifying to be a lower high, that tells us that the next high we are anticipating should not close above this high. I don't know if I should use my part. So this high, if you observe this high and this high is higher than this high. You understand? This low is higher than this low, which is this current low where the arrow is lower than this low. You understand? And this high here that originated this, that created this low, has to be higher than the future, which is the next high. Because this high now broke this previous low, it validates. You cannot call this a high until the low it created broke the previous low. That qualifies this one to be called a lower high, because this high now, the low that came from this high broke the previous low. So not until this low here breaks this previous low is not qualified. This high is not qualified as a lower high. But because he broke it, we can now qualify it as a lower high. You understand? Good. So I'll explain further. I'm going to explain further on how we got our entries, because I didn't get to enter this trade for a very long time until I just got my. So on the 1 hour, this is the zone here. Let me first of all do something else for you guys to see. Sorry, please excuse me. This eclipse event is all good. So you can see here that this new high that was originated here, it didn't break it here. It didn't break this low, didn't break it, but we discovered that there was another high in this zone that broke this previous low. That's what I want you to see. There was a breakout on the previous low. I've always told you, anytime you see an impulsive breakout, use the zone. But if the breakout is not impulsive, if the breakout is not aggressive, use your Fibonacci. Do you understand me? I will show you critical examples now. So, but one of the first thing I want you to identify is that from this high here, we discovered that there was an impulsive breakout to this point, breaking out this low. You understand? But since it break this low, where will we anticipating entry here, which was the new lower high. You can see this is the new lower high here. Good. So let me show you, let me give you the possible scenarios where you use the Fibonacci, so you know, like this trend here now. You can see that the breakout from this point to this point was very weak. It was not long. You understand? So we use the Fibonacci. Yeah, we use the Fibonacci. And the Fibonacci, what you just do, you just map out your zone, your 0.5 to 0.6 zone. But sometimes in these scenarios, you use your 0.6 to 0.5 zones, because you experience kind of like will experience fake outs with the 0.5. And if you see what I did here now, the Fibonacci here, the zone in the 0.6 zone to the 0.7 zone was the same. If I should draw this thing longer, you see it was the neckline of the previous structure. You can see this right now, right? Simple entries. Enter the market here on the hourly time frame. You don't have to hold this trade for 2 days, 3 days. Just although it's a higher time frame, but because of your entry, you'll be entering at where liquidity is high. So you will not have to, if you observe, we didn't hold this trade for even up to a day. The candles here wasn't up to 24 candles before we experienced the breakout. Already deep in profit. We were straight in profit. Same thing happened here. I'll use here now. You can see that there was a zone here. Okay, let me show you. Yeah, you can see that there was a zone here. You can see this zone here, and the breakout came out impulsively. That's what I want you to identify. It came out impulsively, just came out straight down. So we know now that if it's going back, it's not going to test the Fibonacci. It's going to test, because the strength of sellers in the market is strong. So the next bust stop for sellers, the next entry spot for sellers is going to be at the previous zone that it broke. Do you understand? Because of the strength of the breakout, I called it the impulse. So this was where our entry was, and you can discover that immediately the market, we got into the trade at this zone. The market came straight down, straight. It didn't branch. It just came up. Red candle, red candle, red candle, red candle. I had some minor dojis, bullish dojis there, but